We saw some firming coming to the fore on Friday, the rand relative to the dollar, but some seeing the rand coming under pressure this week as commodity prices, they say, fall. So far today, the rand holding steady, and that on the back of the fact that commodity prices have been on the rise so far.
Yes, indeed. We did see the rand strength continue on Friday on the back of increased global sentiment. We also saw the manufacturing data out of the US come in a bit stronger than expected, and that really bodes well for global recovery prospects. And at the end of the day, we really saw the rally in risky assets continue into the long weekend. The fact that safe haven assets such as gold and the Swiss franc is also starting to lose some ground is another indication of how we see that the risk appetite is starting to regain momentum. But we did see the dollar weaken. We do expect the dollar to continue to weaken in relation to the euro on the back of mounting expectations that the ECB could possibly hike rates later this week. We do expect that the euro will remain on the front foot today on the back of the fact that the approval for further funding for Greece. But we do see that risk appetite will remain high and that the dollar remains under pressure. And because of that, we do see that the bias really will remain in favor of rand strength this week.
All of this just cementing how much direction we're actually taking from global markets at this stage, with the latest data on the local front on Friday, and that being PMI numbers seeming to have been pushed out expectations of a rate hike to the early part of next year now.
Indeed, Standard Bank has been of the view for some time that we only expect a rate increase in the first quarter of next year. We are penciling in an increase of 50 basis points in January next year. We do believe that the current inflation profile will remain within the target range this year and next year. And we only see a breach of the upper band of, well, the upper limit of the target sometime next year. So we do expect an interest rate increase only to materialize next year.
At this stage, we've got 670 being pegged as tough resistance going into this week. What's your trading range?
We do expect a trading range of about 671 to about 680. However, if the strike activity later today does sour, but we could see the rand come under some pressure.